I want to be fully positioned for winning.
Yeah.
So I will have all my ducks in a row for that moment. I will be fully invested, I will be in position, and that rocket fuel will ignite 3, 4, 5, 6, 7 rockets so that we crush it when the time is right.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why? Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Simon Severino. Simon's created $2+ billion additional dollars in sales for his clients over the last 21 years. He's an advisor who became CEO and has had to learn the importance of working on the business more than in it, and now shares his proven techniques with high-ticket entrepreneurs. So, Simon, I first want to just say thank you so much for coming on the show, taking the time out. I'm super excited to talk today.
Thanks, Jason, for having me. Hello, everyone.
Why don't we start with you just telling everyone, kind of a bit about yourself, your background, and then we'll dive into the, today's topics.
Sure. So 22 years ago, I did fall in love with the topic of go-to-market because it's emotionally challenging and intellectually challenging. How do I enter a market, crush it in the market, and stay defendable in the market so that nobody can push me out of that market? I just love it. I love everything about it. The buyer psychology, understanding the market, but then also entering in the competitive aspect of that, and then also defending it. So, and all the dynamics of understanding how to position yourself so that nobody can quickly eat your lunch, take your clients, take your market shares. So I did fall in love with that topic. 22 years later, I'm still doing exactly that day after day. I'm a sales coach and a business strategy coach to entrepreneurs and CEOs worldwide. The only thing is, I became now the Simon strategy consultant became a firm. That firm is now a global firm, and we help people in many countries. And the company is called Strategy Sprints.
Excellent. And you have a book of the same title. We'll make sure that we let people know that. We'll definitely want people to check that out. So, I mean, already very interesting, because I think, when we talk about sales and coaching people in sales, I've never even heard someone mention, the techniques about keeping your sales. So already some topics to touch on. I guess maybe what makes the most sense is kind of, we can talk about, I guess, the order of that, like how when you're starting with a client, you're coaching, sort of what are the first things you're looking at, and then kind of walk through some of those steps with us, at least at a high level, so people understand what we're talking about.
Sure. So when you start a business, let's say you have an idea and you start a business. Um, let's say it's a real estate investment business, right? The first steps are understanding the market, quickly validating your hypothesis. You have an hypothesis, you think there is a need for a certain offer. And so the first step is really to quickly validate or invalidate that offer. So, how quickly can you run 2, 3 tiny launches so that you see if your assumption is actually true or not, without spending a lot of money and without wasting a lot of time. So you quickly launch 2, 3 things, you offer it to 5 people, you measure progress quickly, you see if it works. That's stage 1. When you get to 35K MRR, monthly recurring revenue on that side, now you know you're onto something. Now your thesis is validated and you can move on to stage 2. Stage 2 means you are probably now becoming the bottleneck of the thing. If you add more clients you can deliver, if you want to add the next project, you don't have time to start it. So you are now the bottleneck. We need to fire you from your own business. And this sounds harsh, but it's actually much easier than it sounds. You have to write down how you do marketing, how do you do sales, and how you do operations, which is the work itself, and then just removing yourself from there. So you start adding one person each, and since you have written it down, and this is what we do with our clients, we have them write it down. This is how we do marketing, this is how we do sales, this is how we do operations. And then since it's written down, now you can hand it over. And when it's handed over, now you can peel yourself out of it. And now you have a business. Now it's not just you anymore. Now it's a business. It runs even when you're on vacation. It makes money while you sleep. And you can enjoy, like a gardener, looking at it, watering it, trimming it a little bit from time to time, and enjoy watching it grow.
Yeah, that's it. That's a great, I mean, an actionable steps. So when you're talking about that monthly recurrent revenue, you said 35K. Is that, you think that's sort of a universal number across most business platforms? Where that number was just very specific. I'm intrigued as kind of where that comes from.
Yeah, in my field, you need a line in the sand that tells you if there is traction or not. And I was in this field, there was no number. So I said, okay, let's just put a line in the sand. What about 35K? My feeling is if every month people pull 35K from you, now you're onto something. Huh?
Mm-hmm.
So that was a preliminary number. And I've never changed it because it works. It could probably be also 32 or 37,000, but 35 works. If every month after month, people give you 35K and say, your stuff is good, please take me as a client, take my money, make it more. Now the thesis is validated. The world needs it, and the world and lists itself into your hands. They want money to be in your hands, and it's $35,000 per month, so it's validated. The world needs your offer, and they think that you are the right team to deliver that. That's all the validation that you need. From there, it's just about scaling it.
And once you get to that second step, you say you're sort of peeling yourself back. Do you have kind of additional levels of how do you think? I mean, I think in the real estate world, talking about scaling your business is like always a hot topic. Like, what's the best way to do that and stuff? And
Mhm.
you've got already, sort of very actionable steps. So you get to that second level where you're starting to peel yourself back, and you're hiring people. You said you write down those processes. Do you have a specific like first person to hire to remove yourself as the bottleneck, or does that depend on the business? What do you think is the best way to place to focus that? You're obviously going to have to pay them, so now you're spending revenue or adding additional expenses in there. What do you think people should focus on there?
Yeah, one question is what to delegate next, and the other question is when to do it. The when question is easy because when the moment is right, when you can make 3 times that money in the same hour by doing something else. So if I'm doing bookkeeping, and in that hour of bookkeeping, since I'm also a terrible bookkeeper, in an hour I don't get much done. But if I'm a great salesperson in that hour, I could sell probably $15,000. So now that 15,000 with a win rate of 50%, let's say in an hour I can make 7,500. What is the hourly rate of a bookkeeper? $100. So now is the time for me to delegate bookkeeping. As soon as you have that 3-to-1 component surpassed, hand it over. So that's the when question. But the harder question is what to delegate. Should you delegate first marketing, sales, or the work itself, operations? So we have a tool that we install with our clients, and the strategy sprints method is made of the daily habit, weekly habit, and monthly habit. Those things will help us identify what's next, because the daily habit helps me identify where I am misallocating my time and where I should allocate my time. And the weekly habit is telling us as a team what's the bottleneck of our business. Is the bottleneck marketing, sales, or operations? One question that a strategy sprints coach asks in a sprint to find the bottleneck is, Jason, if next week you triple the amount of new clients, which means new projects, which part of your business breaks first? If it's the delivery part, we double click into the delivery part and say, okay, which part of the delivery breaks first? That's the first role to hire, because that you have to expand, you have to solve that bottleneck. Bottleneck means you improve it by 20%, but the overall throughput is higher than if you just improve everything by 20%. So
Right.
you have to solve that bottleneck first. It's literally like a bottle that has this thin part, right? And there can't be more water flowing through if you don't uh, solve that bottleneck first. That will be your next hire. So it's either operations,
Yeah.
or, and in operations it can be customer service, customer onboarding, customer success. It can be building a chat bot, whatever your operations are. It's the delivery of the work itself. It can be account management, um, everything that's delivering, right, the work. And then, or it's sales, or it's marketing. That's the next thing to do. Then the next question is, what is your superpower? So if you are amazing at sales, that's the last thing you should give out of hand. So in my case, the very first one was bookkeeping, because I'm terrible at it. I hate it.
Yeah.
And then the next one was everything invoicing. Like, I hate also checking which client did pay when, who do they need to remind. Okay, that was the next thing. And everything that's boring, basically, I delegated first. And so you know exactly what's boring for you. That's the first stuff to delegate. The next thing is, okay, what's your superpower? It's usually either marketing or sales or client delivery. And client delivery should be delegated at some point, because you need those 40 hours either on marketing or on sales to scale the baby. If you're the owner, if you're the founder, you can't delegate scaling. That's why operations will be delegated.
Yeah.
It's also the easiest to delegate. And then you move to marketing. Probably you will delegate marketing. In my case, I've stuck with sales the longest time, and I'm still one person in the sales team. At some point, you will split sales into appointment setting and closing deals. And then there is also upsell, cross sell, but that is done by the operations team. You have to train them how to upsell, cross sell, because the first sales is done by the sales team, but the second sell is done by the delivery team. Clients that are so happy that they want to stick with you.
Okay. Yeah. That makes a lot of sense, and I thank you for. I mean, the way that you present it. Obviously, this is what you do, but the way that you present it, it just it makes a lot of sense, and you sort of answered the question I was going to ask. And you said you check what's going to break first if you up increase sales, but the piece about what you're good at or what you enjoy doing, that does, it seems like that does come into play to some extent as to what you're gonna put out there. I agree with you. I thank goodness there are bookkeepers, because I can't imagine it. I mean, it's just it is the worst task to have to take on yourself, but it's just something that I think a lot of business owners do or just don't do, and it it's an important piece of the puzzle. So very cool. We talked on a little bit before, right before we started recording. One of the things that has come up a lot in the real estate space, and I'm sure this is applicable across any business, but right now, the real estate market is a little tricky in the sense that it probably at its base level, it's not generating a lot of cash flow. And so a lot of people in the business are looking for additional ways to create revenue. And so I'm sure that that is a piece of what you coach and kind of you have some ideas on that. And I think I have two questions around this. One is the obvious of, do you have suggestions on how, ways to increase revenue? But first off, how would you tie that into that sort of bottleneck piece, right? Because I think if you start adding in all these, additional streams of revenue, you may make that bottleneck worse and not do any of them well. So if you can kind of, I know I'm asking two questions sort of at once, but I think they're tied together.
Yeah, real estate, especially commercial real estate right now, is down in most countries. So there's not much to do there except being, patient and
Yep.
endure. And you can change the interest rates, and you cannot even influence the key levers. It's a few people deciding the interest rates. So nothing to do there except waiting. Now, let's call this a bear market, right? What to do in a bear? I love actually bear markets because now I have the time to build additional revenue streams. I'm working with a lot of financial advisors, small ones like 3 people, and also huge ones, the big advisories with the very well-known names. And in those sprints, we're looking at a few things. First, can you add additional assets? So you might add some funds or REITs or different forms of assets. If that's possible, that's one thing to look at in terms of, okay, you came for commercial real estate. Well, right now it's not the best time, but I have this other option that solves the problem that you want to solve. And the problem is wealth building or wealth preservation. So there are many ways to solve that problem. So you can add offers. That's one thing. The other thing is when you have revenue, you can add recurring revenue on top of that, a subscription. What about writing a newsletter about your topic? For example, the one person that I'm working with, they're a macro expert. And so they say, hey, subscribe to my macro letter. I will inform you when the Fed has a meeting, and I will tell you exactly the probability of an interest rate cut or hike. And so people who are investors, they are interested in this content, right? I call it alpha. They want alpha. They want to know where is the upside potential. So they might subscribe. When you have enough subscriber, you can make that a paid subscription. Now you have a revenue stream from just, thinking about things which you have to do anyways, right? So you have to observe the market, think about things, be ahead of the curve. You are doing your research anyways, but now you're getting paid for research. So now paid newsletter. On top of that, since it's a bear market, you have time to write a book about your specific method on how you create wealth. Because in the end, it's about wealth building or wealth preservation. So you can write actually 2 books, one about building wealth and one about keeping wealth. It's 2 books, right? So you write one of these books. Now you have IP, you have defendable intellectual property. Like my book is coming out in Chinese now. So I sold the rights to a publisher in China. I'm doing nothing. I wrote the book once, but it's creating royalties every 6 months without me doing anything. So that's one passive income stream. It's not even recurring, it's passive now. Mm-hmm. Plus, whenever rights are sold to another language or to these platforms that summarize books, they just pay for the IP. This is called IP lending. That's a full passive stream that you can stack upon your current streams. Then you can add some consultancy. Hey, here are the 8 steps of building an uncorrelated set of assets. Real estate is one, here is another one. You can add consultancy packages. That's high margin, low risk. You have zero capital expenditure. If it works, you have immediately high margins there. On top of that, you can add, additional income streams, rental income, dividends income, capital gains, staking rewards. There's so much that you can stack upon it. And with that client, we have now 7 different revenue streams. Because it was a bear market, we had time to strategize and to build those
Yeah.
things. In a bull market, nobody has time for anything, right? You're just trying to survive.
Yeah. Yeah. That's actually really interesting. I mean, the bear markets, one of the things, and I hate this saying, but one of the, one of the things that people say in real estate right now is, survive to 25. And
Yes.
and it's true in the sense that, ultimately markets turn around, right? Markets change, they go up and down, it's going to turn around. And so the hope is that, that happens by 2025. But what you just said, kind of you're surviving in the bull market is kind of the flip side of that coin, where I'm assuming that you're referring to just when things are good, transaction volume is high. You're sort of running at a 1,000 miles a minute, trying to generate the revenue that's readily available right there, because
Yeah.
whether it's real estate or something else, like if things are good, people are spending money, you're able to take advantage of that. It's when things are that bear market where you actually, as you said, have the time, which is a really great perspective, I think, for I mean, for me, but for other people, I think a lot of times when if you're in real estate, or whatever your market is, when the market's down, sometimes there's a little bit of that, oh well, the market's down now, I can't do anything, or I'm just gonna feel sad, or whatever that is. But you're painting it
I
as,
love bear markets. This
yeah.
this book, Strategy Sprints book, was created in my bear market, which was the pandemic. I
Yeah.
couldn't fly. Most of my business was in canceled because I couldn't fly there to do it, and so I had now time to write a book. In during bull markets, you're just delivering. You don't have time for deep innovation. In a bear market, now you have the time. So I love it because now I can sit down and do the heads down work,
Yeah.
thinking about the next thing to add, writing the next book, thinking about big strategic partnerships, thinking about the vision in 3 years, all these things. This is when, and this is when you have time for that. And yes, goal one is just keep rolling, basically survive to 25. Yeah, but not just surviving. You want to crush it in 25.
Right.
So when
Right.
25, whenever it happens that the interest rates get cut, I want to be fully positioned for winning.
Yeah.
So I will have all my ducks in a row for that moment. I will be fully invested. I will be in position, and that rocket fuel will ignite 3, 4, 5, 6, 7 rockets, so that we crush it when the time is right.
Yeah. No, it's a great perspective on it. I mean, what we should be saying is revive in 25, or thrive to 20. Someone should have someone should have come up with a more positive more positive look at that, with that saying. But no, I love that perspective. I think it's a really important reframe of what to look at, or what, how to approach a bear market. Because I think, you know people feel good when they're doing right. When they're, I'm buying real estate, I'm making it happen. Sort of whatever your business is, your transactions are high, you're generating a lot of revenue. And I think that, using the downtime as a thinking and strategizing, and sort of building an infrastructure in place, so that the next time we have, a bull run, that you can take full advantage of it rather than just kind of hanging on. I think it's actually really, really smart. Um, I think it means you have to, when you are in that bull market, you have to recognize that stacking some reserves, things like that, and it's all going to tie together, right? If you're creating those recurring revenue streams, it's all going to kind of tie together over time. So, I do really like that perspective. I think that's great.
And it compounds, right?
Yeah.
Now, at some point, the market reverts back to mean. Now, you are fully positioned, you are fully invested, you will generate now excess cash, you will take some profits. And when the next bear market comes, because it will also inevitably come, you will be ready to buy more.
Yeah. No, it's great. Um, when you're working with clients and sort of this is the strategizing time, what do you do? You talked about sort of removing that bottleneck, removing yourself from that bottleneck when you're having sort of ups and downs in the market, and understanding those don't happen like overnight, right? Like we have years of bull or years of bear markets. How do you balance that with you know up and down in revenue, and also um, putting people in those positions to sort of remove yourself from the business? How do you advise your clients on sort of managing all of that, kind of as you grow and scale? If the market drops and you have less revenue, now you've still got people on your team that you want to take care of. How do you have kind of impact, or not impact, but do you have an impression as to what you suggest people do in those scenarios?
Yeah, in the Strategy Sprints book, I share how to manage costs in an agile way. Agile means if you have less work, that the costs go down with the work. And when you have more work, the costs go up with the work. So they're not dependent on revenues, they're dependent on profits. And I share exactly how to negotiate with vendors contracts that are performance based versus time based, that are, you pay more when they deliver more, and you pay more when there is more work, but you pay less when there is less work, and you pay less if there are less results. That way you are both resilient, both the vendors and you can go up and down with the market and scale with it, which will increase the resilience for all people in your ecosystem. So you all will be around longer and can survive bear markets and bull markets. So one thing is to turn fixed costs into variable costs by renegotiating the contracts. The second is duration of the context. Make the duration of the contracts very, very short with the vendors where you have risk, and make them very long with the tenants. For example, I'm invested in VICI, which is this Las Vegas real estate fund. They have contracts of 42 years with their tenants. Their tenants are, the Venetian and these strip resorts at in Las Vegas. So having 42 years of a contract length reduces your risk, and having the other vendors, like for example people who bring food to your resort on a shorter duration, that's the optimal way of running a business. So in that case, Vici, I think it's very low risk. It's doing terrible, of course, from a price point, because it's interest rate dependent. They cannot change that, but they can manage their costs by having very short contracts and very flexible contracts with their staff. They're doing that. And by having very long contracts where the risk is all on the tenants. So their tenants is MGM resorts. And if, let's say, CPI goes up and the prices, inflation goes up, that directly escalates to the tenants. So they have zero risk. I think they're managing really, really well, because they have a grip on costs, on the length of the contracts. They have the right length of the contracts, and very agile contracts, if you want. Um, Short where they need to be short, and long where they need to be long. So if you do that, you're increasing the probability. I think they will come out strong the other side. I'm a holder. I'm not adding right now, but I think they will come out strong 2025, 2026 on the other side because they're doing everything right. It's and the book has the same principles that they are applying.
Yeah. No, it's excellent advice. I think um, some really important concepts there that I think people can get a lot of value from there. So we'll definitely get people to check out your book. Simon, I want to switch gears. I want to get to ask you the questions I ask every guest, and the first one is related to the name of the show, being Know Your Why. So what is your why? You obviously had a lot of success, certainly in coaching people and growing businesses. What drives you now? What kind of keeps you motivated?
My only goal is having fun. That's the only thing that motivates me. And I'm a father of three. I'm a CEO. I'm a husband. So how do you have fun? Well, by improving, by winning in the market. That's one thing, right? Winning the day, winning the week, winning the month, winning the year, winning the decade. So I have a long vision. I know that I can build an empire over 20 years, and I try to win every day and every week. Every day by starting already with a run before anybody wakes up. I was already running, and I won against me, right, and against many other people who were lazier. So I've already a little win. Now that's the first part of my fun. Then in the morning I have some deep work where I'm uninterrupted. I can finish one thing. In the afternoon, I have interviews like this one. I enjoy that totally, sharing what I'm learning, the failures, the insights, the learnings, what's next. This is what's fun for me, enjoying the process, right? Of being. I'm 44. I have three little kids. Many people say, "Oh my God, this is a tough time. I'm not sleeping." Well, I'm embracing it. I'm enjoying it. Am I sleeping a lot? Nope. Do I have a lot of pressure? Oh yeah. But I'm enjoying it. It's a wild ride, and it's an adventure. Every day is an adventure. I'm taking it. I'm rolling with the punches, and I'm having fun. That's my goal. Having fun.
Yeah, that's amazing. I think I'm there with you. I have young kids as well, and yeah, who cares? I mean, you sleep someday. It doesn't matter. Like it's more about just enjoying that time with them, and they're not going to stay young forever. So it's definitely at some point they won't be excited to hang out with dad. So that's I look at it as so someday the tables will be turned when I'm like, hey, you guys want to you want to hang out with me, and they're going to be out with their friends and all of that. So
Yeah.
no, I think it's such true statement. We just need to have fun with them now while they're probably at that's their biggest interest as well. So pretty great. When people hear this and they want to reach out to you, what's the best way to connect?
So they can read the book, Strategy Sprints. It's on Amazon. They can go to our website, strategysprints.com. They can download a ton of tools and checklists that I use, and they can use them directly. If they want to talk to us, strategysprints.com, and then they click to land on our calendar, and we can talk.
And we'll put that stuff in the show notes too, so people can find you. Certainly, you should check out the book. Uh, my last question, I always ask people, what advice would you give to someone who wants to get started? And a lot of times we're talking about, to get started in real estate, but I think there's been a little bit of a different topic. I would say, what advice would you give to someone who wants to get started, kind of in business? They're hearing this and they're like, okay, I have an idea. I want to start something. I want to grow it. This is all very inspiring. What would you tell them?
It's much harder than you think. So only do it if you cannot other way. So basically there are entrepreneurs and there are normal people. If you're a normal person, get a normal job. But if you can't, for some reason, you're unemployable, you're totally in love with an idea, every single minute you think about the venture that you can build, well, then you're an entrepreneur. Good luck. It's going to be tough. You better buy the book, Strategy Sprints. Otherwise, it's a roller coaster and you will be punched in the face a lot. So you should really be built for that and be able to enjoy that, because it's going to be tough. But there are blueprints, like the Strategy Sprints blueprints, and use them, and don't give up too early. Keep rolling.
Yeah, no, it's it is great, and yes, it will be harder than you think. I can second that. It's been much harder than I thought, but also it's just you're, as you said, like when you have that passion and you just can't sort of think about it. I think sometimes there's nothing wrong with regular people and having regular jobs and things like that, but I do think they just don't understand. They might not understand what you're talking about, that thing where you can't get it out of your head, you can't stop thinking about kind of those ideas. And so I think for those entrepreneurs out there, it's get the book, use the use the resources that are available to you. So that's really great. But Simon, it's been great chatting with you. Thank you so much for coming on the show today. I appreciate having you on. I appreciate everything that you shared. I think people can learn a ton from this, and then grab the book and really, apply that to their business. So thank you so much.
Thanks, Jason. Keep rolling.
Yeah, absolutely. Folks listening, I know you're going to love this one. Please like, rate, and review the show so we can get more great guests like Simon. And thank you all for listening. Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?